Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are looking at metals and gold prices. A big bullish move on Friday. We'll call gold prices have been kind of stuck in a range. We've been calling it the neutral range. Just above the lows are just above 1300 and the highs really kind of in the mid 1320s. And we really needed a push below 1300 to see the bears come out in full force or trade above, and a sustainable trade above 1330 to see the bulls come out. Well, lo and behold, not on FOMC, not the day after FOMC, but 2 days after FOMC, we got a big move in gold. Trades north of 1350. It looks to me like obviously the big pop came in. We saw buyers with both hands. A lot of technical bullish momentum that we've been waiting for, or whether it was going to be bullish or bearish, I guess is the way to look at it. The bulls won, and we saw a big trade. So right now you've got a big opening here for gold to continue to see a trade, a sustainable trade above 1330 and beyond. So I think right now for the foreseeable future, at least until we start to get some more pieces of the puzzle, whether it be about tariffs or trade out of Washington, right now it seems to be that gold is going to find favor. And if you look at the dollar, it suffered. It's ending the week on the lows. It's not seeing any kind of positive momentum. You're seeing the euro and you're seeing the pound and the yen all outperform. And I think right now the dollar continues to suffer with the idea that, yes, the Fed just raised rates and you thought that would have been dollar positive. However, it's how many times they're going to continue to raise down the road versus what we're seeing out of some of the other central banks. So right now the dollar continues to see woes. Gold continues to propel higher, or at least propelled higher today. And now you got to look at the positioning. We've seen modest exiting of longs from the speculators, and that could have been one of the reasons why we saw such a big push once we got north of 1330. I think a lot of those speculators that recently sold are now back in, or at least we're driving the price up to get back in, and we'll have to wait and see what happens in the weeks ahead as to how long we can hold this. But I can say this, is that we typically see gold run up on a defensive trade ahead of key events. Events like FOMC, events like potential trade wars and all that. Now we're starting to see it kind of in the middle to after these events, which means it could be more of a sustainable trade. I'm targeting on the upside north of 1360. Certainly we'd like to see a sustainable trade at around 1350 or at least above 1330 for the foreseeable future. But I think right now with the way the dollar woes are trading, with the way the speculators are going to be piling back in, and with the uncertainty of our economy and where the Fed's going, gold seems like a pretty safe place to be. So right now, heading into the weekend on a gold bull momentum, this is Todd Colvin coming to you from the floor of the CME Group.